Hi, it's Mike Power of Silver Range, and this is our fall look at the markets. First, a quick word from our lawyers. Let's take a look at market activity, financing activity, which we track in great detail. Have a look at options. That's our window into the future. And then wrap it up with a quick look at what's going on at Silver Range. Well, it's pretty clear the market has finally turned around, although it took a while to see it. The actual bottom was in November 2023, and we appear to be well on the way in a new market cycle, at least at the venture. It's a different story, however, over at the CSE, where basically the market has flatlined and, in fact, has been continued to decline since the peak in 2020. There was a bit of a dead cat bounce uh, in August, September of this year when the venture also peaked. But what this really reflects is a tale of two markets, a theme of this presentation, insofar as that companies at the bottom end of the market are having a tough time attracting interest and financing. We zoom out to have a look at the current upturn in context. We see that it's pretty clear that we're in the early days, I hope, of a new market cycle, perhaps longer than some of the others that have preceded it, and perhaps a little higher amplitude than at least the last two. Now, it's a bit of a chicken or an egg argument whether markets drive financing or financing drive market, but I think we can all agree that without money, nothing happens. So let's have a quick look at financings. If we look at the financing activity in aggregate, it's actually looking a lot better. Things have picked up quite a bit from the terrible days of 2023, and we're in fact now averaging better than 550 million every 2 weeks, which is our dividing line between an okay and a good market. So we're in good market territory. So there's a big thumbs up for the future. When we look at the market in more detail, however, there's a different picture, particularly at the bottom end, where many companies need to raise smaller sums of money for particularly grassroots operations. And here we see distress. Yeah, we're looking at financings less than 2 million, and these are averaging about 39 million every 2 weeks right now. And that's just on the dividing line between terrible and okay. So this isn't a good picture. And furthermore, look, you'll see it's rather flat. So there's continued ongoing distress at the bottom end of the market with respect to raising funds to continue work. So at best, you could say this indicator is tepid. Finally, it's important to look at the proportion of financings by size. And the number of very small financings remains distressingly large. Financings less than 200K currently amount to about 23% of total financings every 2 weeks on average. And this is above our crucial threshold for a healthy market. The dividing line between sort of bad market conditions and okay market conditions would be about a 15% proportion of these very small financings, and we're not there yet. Things are improving, but this is overall another negative indicator. So in aggregate, markets are improving overall, but conditions are pretty tough at the bottom end of the market. Well, let's turn to option activity, since that's a really good indicator of what insiders see the future might hold. We'll start with the big picture. Here's back to 2012. The blue indicates periods of overall market activity, market peaks, if you will, and there's a weird critical metal boomlet in 2023 in green here. You can see that the overall pattern of option activity is rather noisy. We've had to smooth it out with a 3-month centered moving average, and even with that, it's somewhat noisy. In recent days, market trend appears generally flat. And that's what you see when you zoom in. You see that option activity over the last year or so has been pretty much at a constant level. And this diagram here, we've color coded options by commodity. If we look at where the money's going in terms of what metals are attracting most option activity, there's a clear trend towards more precious metal options in gold and silver, uh, and a somewhat declining interest in battery critical metals. Well, as Yogi Berra said, predictions are tough, especially about the future, but let's give it a shot. So we see a continued tale of two markets wherein a few companies at the top are going to be able to access serious money, and the majority of companies are going to find it still a tough market in which to finance. We see the venture improving over the year. Questions out on the composite index, whether that's going to be better before very long. Financing activity will also reflect this tale of two markets. It's going to be tough to finance in the bottom end of the market, trying to raise money less than 2 million, and a few companies at the top will do quite well. And option activity will remain subdued with an increasing proportion devoted to precious metals. So that's what we think's ahead, at least as far as perhaps PDAC. Quiet but improving markets are an opportunity for us at Silver Range, and we're forging ahead on a number of fronts. At our East Goldfield project, we finished an airborne geophysical survey. We did some surface sampling, identified several new interesting gold zones, including one with some very interesting surface mineralization. And we're following that up with some shallow diamond drilling right now. At Alamo in Arizona, a geochem survey, mapping, and prospecting are planned early in December. Hopefully we'll find some more of this great looking stuff here. If you find this specular hematite with a trace of copper in it, it'll have a lot of gold. We've added a couple of new projects. Quinn is a shear hosted mesothermal target up in northern Nevada, had some nice high grade numbers come out of it. And we also staked an interesting target in Utah, Drum. It's a Carlin-like target that was looked at by a few big guys, and we managed to pick it up, and we're gonna take a whack at it. Our partners are busy, and hopefully we'll have some news that will help us out there soon. Broden Mining has a deal in place to restart the Faro mining complex. We understand that there are no serious impediments to that deal going ahead, and now we're just in the process of completing agreements and whatnot. It's taken a long time to do this deal, and it might take a little longer. Excalibur Metals has our Bell Helen project near Tonopah. It's being run by John Gilbert, who used to work with me. He's now the CEO, knows the property well, and they've hit the ground running. And we hope they'll be able to drill in the new year. Walker Lane Resources has several of our projects, and they recently completed airborne geophysical surveys at Toohey Canyon and Silver Mountain. They're in the middle of financing, and we hope to see them start work on the ground in the very near future. And finally, but last but not least, is Rush Gold, who has our legal tender and skylight projects. As we speak, they're running a hyperspectral survey there and are hoping to finance and drill again early in the new year. So lots of things, pots on the stove here, and hopefully one or two of them will boil over before too long. So that's the story. Markets are improving slowly and not for everyone, unfortunately, but there are better days ahead, and Silver Range is positioning itself to take advantage of them. We hope you'll stay tuned. Thanks.